Hey traders, welcome to the Raghee Report. I think this is the first Raghee Report for 2023. Great to see everyone. All right, so as always with any of our shows, go ahead and get those questions in. We'll tackle those first come, first serve. The idea for the time we have here together is let's get through some of the market structure. Let's get through some of the symbols that are on my radar. What are the hot zones that we're dealing with this week? We're going to take a look at the earnings hot zones through my favorite earnings site, Estimize. And so without further ado, let's just get to it. Of course, the markets, indices, currencies, treasuries, the futures open at 6. We're getting a very, very early look at the Asian session, Auckland, Sydney, Tokyo, Hong Kong, Singapore. So between now, 6 p.m. Eastern, and about 8, we're going to slowly see that volume, that participation come into the market. All right, so that's what we're looking at right now. Okay, let's jump into, I'm going to jump into my web browser here. And we'll start off with a look at Forex Factory. And the whole idea here is just to get an idea of who's on bank holiday. Where are we going to be lacking certain participation in terms of volume and attention and opinion? And you'll see that China is on bank holiday today, Monday, Tuesday. And that does mean that our Asian session, right? Just take a look at the whole bank holiday. That does mean that the Asian session this week will be a little lighter than normal. I don't trade the Asian session that much. It's on at that time period from about 7, 8 Eastern to call it 2 a.m. when we get the European Open. I'm not super active during this time, but remember, if Japan is closed, Australia, you know, of course, China, we're going to see a little bit less attention and opinion in that area, in that market. This was something that I used to look at back in the day when I traded a lot of Forex, right? The Forex market, the sun is shining somewhere on a financial center on the planet. And our job is to wait for that participation and trade it. Of course, Forex being a very liquid global market. Ultimately, and the lighting does seem a little dark, doesn't it? How's that? A little bit better? Maybe, maybe not. So ultimately, what we want to remember is that if we're going to have any interest in a session, please make sure that you know where the hot zones are and you know what kind of participation we're going to get. What are we getting this week? Lagarde tomorrow, that could move the euro and the US dollar, as could all this data out of Europe on Tuesday with the PMI. We have flash services PMI in the US on Tuesday as well. Scrolling down to Wednesday. Gang, any of the G7, G8 central banks are going to be important because other central banks' take on inflation and their decisions on monetary policy are going to be very, very important. Remember, Bank of Canada has moved the US equities indices, treasuries before. Heads up for that one on the 25th. Can't believe when this month is just flying by, and we're wrapping up this month. Core durable goods orders, new home sales on Thursday. That's going to be a pretty busy day for hot zones. Probably our most important for US data. That's going to be on Thursday. All right. Other calendar I want to check out, trading economics. And why do I want to check this calendar out? This is, gang, this is what I do on a Sunday, right? This is what I'm going to do maybe Sunday or Monday morning. And let's take a look. The reason I'm going to take a look at trading economics as well is oftentimes there are FOMC speaking events that we won't see. And you might say, wow, we couldn't get those FOMC members to shut up. What gives? Where are they? Well, gang, we're in that blackout period. We have 9 days, just 9 days before the next, well, 10-ish, right? 9 days, 19 hours until that next FOMC meeting on Feb 1. So now this is when they have to shut up, right? We won't hear from them, thankfully. And so if you're wondering, where are all those chucklehead events? We won't see them until after the 1st, all right? One last calendar to take a look at and that's a calendar over at Estimize. Now, I use Estimize. I log into my StockTwits account. I'm going to do that right now. And this is how we get access to Estimize. You don't have to have a paid subscription, although the paid subscription is pretty cool if that's the kind of data you like to play with. But take a look here, gang. What I've done is I've gone through the heavily weighted stocks in the sectors and the indices that I want to track, and then I'm following all of these. So this list is curated by moi. And in this way, I can keep an eye on what the different economic events are, not necessarily just this week, right? I think a lot of times we think now's the window for opportunity with earnings, and that's just not the case, right? That's just not the case. What I'm looking at is what's coming up a month from now. I'm going to be looking at the latter part of February for potential setups if I want to trade anything at all. And you see, by the time we get to about the end of February, we have a little bit more action, TJ Maxx, Walmart, Booking, Medtronics, Home Depot, right? But this week's a big one, gang. We've got Johnson and Johnson, Raytheon, Microsoft, right? Boeing. We got some heavily weighted names here that are coming up. Tesla on Wednesday, Comcast, MasterCard, Intel. We got quite a few high concentration weighted, heavy weighted stocks coming up. This is Estimize. These are the three calendars that I like to take a look at for hot zones, for those high impact events that could affect my trading. All right, so let's get to the charts and take a quick peek at some key markets. What are key markets for me? Key markets for me are going to be the euro, because the euro is the best way for me to track the US dollar. Sure, we could take a look at the $ DXY. That's fine, but this is still the dollar index basket. This is still the euro, the pound, the yen, and some fairy dusting of three other currencies. But the heaviest weighted currency in the dollar index basket is absolutely, without even a peer, is the euro. This is 57, 58% of the dollar. And with this view, what we're able to get is a lot of clarity on what the dollar is doing with the strongest inverse or negatively correlated currency. In other words, euro goes up, dollar goes down. It's just that clear. And take a look at the trend on the euro, gang. And how do we know what the trend on the euro is? Let me grab my drawing tools here. For those of you that are super new to some of these tools that I am walking you through, we're almost at the end of January, gang. It's hard to believe this month flew by so fast. I do want to let everyone know that on February 15th at 8 p.m. Eastern, we're going to have a webinar on my COPS tools, which include this multi-trend that I'm going to walk you through here in just a moment. All right, what's the importance of the multi-trend? What's the importance of knowing structure? Now, look, however you want to prioritize the trend or the non-trend, however you want to prioritize what the structure of the market is, cool. If you have another process, awesome. What I have found, though, is a lot of traders don't have a process to start with the most important step, which is, wow, is this an uptrend? Is this chop, or is this a downtrend? And for me, the first step for every single setup is going to be, what is the structure of the market? And that is absolutely those two rows of the multi-trend. As long as this is green, gang, we buy the dip. This is a dip buy, right? But then so are these. And these might be some unusual dip buys that you may not see me put on before, because those dip buys, unlike this one, these are the DPMR. These are daily price movement ranges. So I've got the wave, which we could look at as a mean reversion. And then we've got alternatives by way of dips via retracements to volatility. These are volatility retracements, these smaller circles. And I want to buy these dips, these retracements, these mean reversions as the euro continues to move higher, which tells us that the dollar continues to move lower. Another market really important to keep an eye on, gang, because it's on the verge of organizing into an uptrend. How do I know that? because the longer the momentum, this upper row of the multi-trend stays green, the more likely this bottom row of yellow could change into an uptrend. So keep that in mind. If this thing goes green over green, we're right back into being able to buy the dip. For now, can I look at some of these daily price movement range levels? We could. I'm clearly more bullish because the momentum is bullish. I would prefer it be a trend. The probability of follow through to higher highs, the probability of support after a retracement is going to be so much better when we are in a bit more of an established trend. All right, so that's ZB. And then the strongest of the indices, gang, continues to be the Dow. And the main reason for that, this is really easy to do. This is another one of the top systems tools. This is a free tool that many of you probably already have, but may not know how to use. It's one of the reasons we're going to be getting together on February to talk about this, which is what do you do with a 200? And why does that even plot right there? What is it measuring and why do we care? Well, first of all, if you take a look at some of these bounces from very close to this level, it should make sense as to why we should care. There is a response, there is a reaction, there's something going on at that level. So we'll keep that in mind. But this is part of that top system where we know that moving averages, market structure, automated support and resistance, the grab, the wave are going to give us an edge. By the way, this group of tools that I call tops, it works very well with just about any other indicator that you're going to use. I say almost because if you have other indicators that are coloring the candles, well, they're not going to get along so well. But that's not a really common indicator, right? If you've got other tools, maybe you're using the squeeze, maybe you're using ready aim fire, almost every other tool, other than the ones that are going to color code your candles, everything else is going to benefit from market structure first, that market structure first approach that is absolutely built into, I mean, dare I even say it's almost dummy proof. I'm evidence of that. I didn't know how important structure was when I first started trading. I knew that just Charles Dow and Dow theory emphasized market phases and market trends. I didn't know just how vital that was going to be and how much more accurate my setups were going to be when I set up every single trade by first remembering structure dictates strategy and strategy dictates indicators rather than randomly applying my favorite indicator or the one that I just bought or the one that I just created because it's my favorite. I remember every time I get a new golf club, I got a fairway wood not all that long ago. It's actually been a long time. And I remember I just wanted to hit that. It was the brand new shiny club in my bag, and I wanted to whack everything with it. And I think that's how we get to new toys, something shiny and new, and we want to apply it to everything. When in fact, structure is going to tell us whether we should or not. All right, let's get into the questions, gang. And if you haven't already jotted it down, please remember February 15. We're going to be getting together, talking about tops, talking about the daily price movement range, and talking about what I'm doing in this market environment. All right, first up, Wilson says, third like on here. Nice. Thank you, Wilson. I appreciate it. Nice biceps. Look at that. It reminds me, I got to start getting into the gym again. Holy cow. Holidays did, well, they were fun. It's time to get back into, we call it the garage, then the dungeon. Time to get back into the dungeon. All right. But thank you very much. Thank you for smashing that like button. I appreciate it. All right, Murph, how are you? Happy Sunday. What parameters do I use for my anchored VWAP? Well, by parameters, there's really only one of two things we're looking at. If it's an end of day, it's a date-based anchor. And if it's an intraday, it's a time-based anchor. I use both, an intraday VWAP and an end of day VWAP. So parameters, time is already anchored. And I would definitely recommend keeping something at 9:30 Eastern if you're, for as far as an anchor goes. And another anchor I'll use is 7. For date, as of today, as of tomorrow, I'm going to have the 3rd of this year as my anchor. And by the way, anchored VWAP, Murph, kudos, because most traders are using the rolling variety, which is not nearly as accurate as the anchored variety. What's the difference? Rolling just sort of automatically, based on your platform's preference, just sort of adjusts where the volume is being studied from. I want to tell the platform, study volume from this point forward. I want that kind of control over what this is yielding as a result, rather than just some random level that the platform is just sort of designated as the parameter to use your words. We want to use it anchored. So kudos on that AVWAP question, because that is where it is at, that anchored VWAP. So thanks so much. All right, Mr. Walker, how are you? Like button, y'all. Thanks, Mr. Walker. XLB, basic materials, and XLE, communication. XLB, as far as a setup, it is trying really hard. I mean, it is putting a valiant effort to try to get into a green structured environment. It's not there yet. It is not there yet. We're trying though. And we're north of the 200. So again, if you haven't yet registered, check out, or wait, actually, we don't have the registration yet, but go ahead and just pencil in February 15. I'll have a registration link for you all, hopefully very, very soon. But if you take a look here, being north of the 200, there was a big battle that was waged here, right? Before the bulls won. Being above the 200 is in the bullish hemisphere. Trying to go green on the trend is going to be the next trick. Then we can start playing pullbacks. But I think the daily price movement ranges at this point are fair game, but they're not going to be as good as if the trend was green. So I don't mind to buy oversold tests of the daily price movement range, but I've got to wait for the stochastic to say we can do it. And you'll notice the last time the stochastic said, sure, we can do that, was way back in here. We haven't seen it since. In fact, the stochastic is saying right now, if you're going to do anything, you're going to short off the DPMR resistance. I'm not sure that I want to short, but that's the only setup that we have right now. So this thing has to travel lower and then maybe test the DPMR, the 200, and then we're in business. All right, that's XLB. XLC, this one's tricky, Mr. Walker, because the liquidity in XLC with the options is really, really tricky. It's not a super liquid ETF if you take a look at the options chain. That said, it's trying to go green. We've got the very, very, very first look at the early transition. This is not a confirmed transition yet, but we will keep an eye on it. But very early signs that the communication sector might be going green. Well, that should get us curious, because I know for some of you, the first thing you're thinking is, hey, Rag, let's crack open that multi-trend. I'm with you. What I want to know is if XLC is trying to go green, that means that there are stocks within XLC that are trying to go green. Case in point, Meta, Netflix. Look at Comcast. Look at Verizon. Look at T. Look at all these. That would be relative performance. So this is trying, right? But this would be where your relative performance is at. Now that you could whittle this down even more and say, okay, which one is above the 200? So Verizon could get taken off that list, right? T looks good. Comcast looks good. So we want to find those symbols that are above the 200 on the daily, all right? Above those white dots, those 200 propulsion dots on the daily. So then we have, let's see. Oh, bear with me. I would not normally take a text, but it's the husband. All right. So then if we have XLC moving higher or trying to, again, find stocks above the 200 that are double green on this multi-trend. Mr. Walker, that's the way I would look at that, my friend. That would be the focus. All right, Daniel, Tesla, you bet. I don't really love the idea of shorting anything in this market. I know a lot of folks out there are uber bears, and that's fine, but I don't like the idea of being particularly bearish. However, this would likely still be rather bearish. I don't know that I can buy Tesla, right? I would say no on a buy, but I would say it would look very, very good if this goes neutral and we can get a 1, 2, 3 reversal. And that's what I'm really going to be looking for. If Tesla can hold the neutral environment, that is what I'm going to be looking for. something along those lines. And if you're wondering, well, give me a for instance, Rog. Take a look at Amazon, the other high weighted stock within the XLY, right? I really don't want to short. I haven't wanted to in about 2 months. And we would want to see a 1, 2, 3, which, by the way, would not so coincidentally take out the resistance of the 100 handle if that were to happen. Pretty cool. It's not a trend follow, it's a price pattern. Okay, let's talk about price patterns for a moment, gang, because I'm showing you something that's been at the heart of my trading for many, many moons. And it is a price pattern. So you might say, Rog, what's the difference between a price pattern and a chart pattern? A lot. All right, a lot. So a price pattern is, frankly, it's objective, right? It doesn't require, you don't need, years and years of experience. It's based on, usually the price patterns that I look at use the high and the low on candles, right? Not trend lines, not support and resistance. These highs and lows on candles. And examples of price patterns would be the 1, 2, 3 that I talk about a lot. It's over at my countdowntrader.com website. The Dow 1, 2, 3, the minor high, the minor low, as well as the inside candle. Those are examples of price patterns. A price pattern is objective, right? Using highs and lows on the candle. So I'm not using the subjectivity of drawing lines. If I were to pass around a chart to 100 of us, I'd probably get at minimum 50 variations of that chart where subjectively we can draw and connect different highs and lows. That's really not what we want to do. There's too much room for error, and there's too much sort of experience and tradecraft, if you will, required. I can teach anybody a price pattern in a matter of 10 or 15 minutes. I think it takes many, many, many months, if not years, to really be able to understand chart patterns. So I don't use chart patterns, right? I guess that's the big takeaway. I do not use, nor do I recommend. I use price patterns, right? I use price patterns. So I hope that makes sense. I think for a lot of traders, that's not a distinction that's often made enough, right? By traders like myself. What's the difference? One is the subjectivity of lines and levels. The other is just making sure we can agree upon different price levels and who here can identify a high or a low on a candle. And that's exactly why I prefer price patterns. All right. So the price pattern I'm looking for here on Amazon would be a 1, 2, 3. And the reason I bring that up, Daniel, when you asked me about Tesla, that's what I would be looking for in the coming weeks. All right. Okay. Next up, I'd love to buy gold. Best trend in metals right now, Alan. Agreed. Best trend in metals. Buy the dip, yeah, but could we buy the dip to the DPMR? Absolutely. If I do not get the mean reversion to the wave, I can buy the more aggressive volatility dip using the DPMR. And again, we're going to talk a lot about this come the 15th, right? A lot of you have already seen me talk about the DPMRs. We're going into our 10th month of testing the setups that we're going to be teaching on March 4. So yeah, gang, I'm not going to, anyone who attended any of my webinars, you all know I'm never going to waste your time. We're going to talk about the importance of the, what time is that going to be? 1 p.m.? Yeah. We're going to be talking about the importance of volatility, how I've been using it, what time frames are working and not working. And then, you can decide for yourself, hey, this is something I think I can use in my trading or not. But I'm always going to walk you through step by step what I'm doing with the tools that I'm doing with. And a lot of you already have some of the TOPS tools. We've made those free since 2016, I believe. I'm going to be talking about how we're starting to use volatility with the TOPS tools to get a better idea of risk and get better opportunities for those dips, for those pullbacks. Not only the DPMR stepping in to help us find more opportunity on the daily, you're going to see how I use them on the 1 hour as well. But I'm getting way ahead of myself. There's a lot of ways, Alan, we could trade gold. The daily DPMR would be one. The other would be looking for those hourly price movement ranges and taking advantage of, I don't know, I want to call this a dip, but this would be support. What is support? Support is a floor. Support is buyers. So think of it this way: a floor is support, support are buyers, and buyers are demand. We are able to find those levels using volatility and time, and that's another way that we're going to be looking for these opportunities here. All right. So that's another way. 1 hour chart. It's a quicker time horizon. It's a shorter time horizon, right, Alan? So if you're thinking, now we have to ask ourselves, gosh, we have a trend on the daily. Wouldn't I love to be in for days, if not weeks? Agreed. But the pullbacks, the frequency of the trades will be fewer. We're only getting one new candle a day. What if we go to the 1 hour? Now we're going to probably get 1, 2, 3 opportunities per week. We might be able to be in the trade for a few hours to a few days. And that's going to give us other opportunities to take advantage of the structure in gold, right? Remember, we're always coming back to structure. We're always coming back to what is the structure: bullish, bearish, or neutral, up, uptrend, downtrend, or chop on that chart. All right, next up, can I please take a look at MRVL and SHOP? Sure. All right, MRVL, I'd probably be cautious on this one. Well, actually, let's go to the daily before I say that. But I would be probably cautious on this one. I don't love the structure. And here's why. It just came out of a downtrend. It's trying to go neutral. We're kind of in the middle of a range. I can't say I have a huge advantage. The only thing I could do at 42 is short. I might pass on MRVL. Let's take a look at SHOP. All right, what do we have here? This could be perhaps a little bit more buy the dippable. And what I would want, let me show you what I'm looking for. This goes right back to tops, neutral market trend, right in there. Okay. Oversold stochastic. Take a look at that signal there, right? Where is our edge coming from? Identifying the structure of the market and then pairing that up with an indicator that's going to work best with it, right? So that's the buy. And then I look for you bet, price pattern, not a chart pattern, not a bunch of lines and levels that I'm sort of subjectively drawing. Price pattern. And this was actually a minor low. You can see that tiny little signal in there tracking that minor low. All right. And by the way, when you have price-based patterns, a lot of that can be automated. And those are things that we've done with things like the Darvas 3.0, right? A lot of you already know that. So I'm looking for a pattern like that again. I don't have a setup at the moment, but that's what I'd be looking for. If anything, quite frankly, we're setting up maybe another short, right? We're setting up maybe another short on SHOP. So be careful. These are both in CHOP. All right. All right, gang. So just like that, holy cow, that 30 minutes flew by. As always, gang, thank you so much for being here. We're going to get the Raghee report back on track. I've had a lot of feedback on 6 versus 6:30. A lot of you emailed me. And yeah, I went with 6 today. And I'm going to be totally upfront with you all. I want to catch the Niners Cowboys game. So I hope everyone's having a wonderful weekend. If you haven't already, jot it down. February 15th, 8 o'clock. We're going to talk about daily price movement ranges, tops, market structure. I can't say this, obviously, for everybody, but 99% of folks, if you get the structure step incorporated into your trading plan, the eye-opening event you're going to have is, oh my gosh, I'm trying to use a choppy market strategy for a trend, or a trending strategy for chop, or I'm at resistance in chop expecting a breakout. Probably not going to happen. You're going to find that you're not trading incorrectly. This is the analogy that I like to use. You're probably grabbing the wrong club, perfectly good club for the shot, right? It's a great club, but it's the wrong one for the shot, to go back to that golfing analogy. So I'll see you on the 15th. And then we do have a class on the 4th. That's going to be the first one of mine this year. We're going to be introducing and explaining and getting everyone up to speed with the daily price movement ranges. All right. So very, very excited. This has been 10 years of basically my working with these price movement ranges in 10 months of intense testing by both myself and the Lorna bot. So cannot wait to show you all what I've got for you. Okay, gang. Go whatever team you're rooting for, and maybe you're just enjoying a nice quiet Sunday. I'll see you all tomorrow morning for charts and coffee. Be good to each other, gang. Thanks as always. Great to get the Raghee report back with you all. And a lot of familiar names and faces. Awesome. Thanks, gang. I'll see you tomorrow.